When I read that section, it made sense to me that why would you deposit all of your money into someone else's bank when you could deposit it into yours? And so it seems a little bit ridiculous, but my All American man on page 17 is depositing all of his paycheck into a bank and then writing checks against it for 34.5 cents of every dollar to pay interest alone back to someone else's banking system. He will never see that money again. It is gone forever. All right, we learned yesterday that 34.5 cents of every dollar goes to interest. When you pay a mortgage, when you pay your car loan, when you pay credit cards, it's more like 45% instead of 35% now. Because more people finance things because things cost more money and people don't have that much more money to spend. Why does he behave this way? It's because no one has ever explained to him a better way of doing things. Once a pattern of life is learned in a culture, it is nigh unto impossible to change. His paradigm is fixed, set in concrete. The peer pressure and conventional wisdom from people like Michael Clark and others is overwhelming. But that doesn't mean it can't be done. When he builds a banking system through life insurance, makes loans to himself to buy automobiles, and pays the policy or policies the same payment he would pay the banking institution, which is what I was showing before when we were pulling up our car loan example. When you pay your policy the same that you would have paid the institution, now he makes what the banking institution would have been made off of him. The interest he pays never leaves his account in control, and if this is done throughout life, consistently throughout life, it'll make a tremendous difference in his financial picture. And when I read that section, it made sense to me that why would you deposit all of your money into someone else's bank when you could deposit it into yours?